Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 20th of August. Starting out with the FTSE 100, where we're still limping around the basically post-March support area. Obviously disappointed to see us back there again, below the old March low, which was around the 74.26 level. Still got the risk of a move down to the floor of that falling trend channel from back in February, 71.50. So I suppose Monday, Tuesday is the day we might see that. RSI already in the oversold area, so below RSI 30. And you can see, as I've said on previous occasions, most times when the market gets down to a sub 30 RSI, that is a buying opportunity. Obviously, there's always a bit of jiggery pokery at that time, very volatile, but that is the situation. We've had that many times. I think all the times actually that we've had the RSI over the last year below the 30 level, the market has subsequently bounced either a few hundred points or even more. So let's see if that happens this time. Onto the DAX, which, like the FTSE, has not been in a good place. So of late, we broke below the rising trend channel from last year, so maybe that needs to be revised. Still the chance of a rebound towards the July support there around 15,400. But obviously we have the 200-day line there, it's 15,300 lurking in the shadows. RSI still above the oversold area as well. So that does suggest that we're really looking for the 200-day line as a rebound area before this market recovers. We need to have an end-of-day close back above Thursday's low, around 15,700 really, to negate the current bearishness. 50-day line falling as well, so that also doesn't help the overall picture there. On to the Dow, and the Dow struggling too. Here we've got this market still below the 50-day moving average. That's around 34,600. Looking for an end-of-day close above that, really, to cancel out the topping out that we've had over the course of late July, early August. The risk still of a move to the floor of that rising trend channel from this time last year at 33,000 or 33,900 rather, and also even a test of the 200-day moving average. 33,700. RSI at 40, so that does allow a little bit of scope for this market just to test that support area and actually also test the July support area as well. But arguably the Dow in better shape at the moment than the FTSE and the DAX. On to Bitcoin, which has certainly not been in good shape of late. We've had the worst case scenario was that we'd head back down to the 200-day moving average, 27,200, and that's been achieved. Now we're back at the floor of the rising trend channel from last year, 26,200. RSI very oversold now at 19, so one would expect a positive reaction pretty soon, but we may still have to take out that June support area towards 24,800 before this market finally picks itself up. Obviously, SpaceX getting rid of its Bitcoin holdings was not exactly a positive for the crypto market. On to the stocks, and a stock which has been struggling for, it feels like ages actually, obviously struggling quite some time, from £22 in the spring of last year, is Audioboom. Here we've got the first signs, the first glimmers of a turnaround. March resistance line there, £1.85 above that, an initial target at around 220, 218, which is the 50-day line, and then a best case scenario target up to £2.50 at the top of that broadening triangle from June. Missing ingredient at the moment is that the RSI is still below neutral 50. We haven't been above that neutral 50 level since way back in March, which is an amazing achievement, an amazing negative achievement. And of course, if we break back below 185, then there's a chance of a retest of the £1.50 area, which was last month's support zone. Moving on to a better looking situation, a stock which I don't cover very often, but here it looks as though Ariana is difficult to resist. We've had an island reversal on full gap to the upside on Wednesday, broke the high of that gap day on Thursday, and we followed through. So initial target here, 3.3 pence, hopefully over the next week or so, and then up to as high as the 3.8 pence level by the end of next month. 3.8 is the top of that broadening triangle from October, but great rebound and gap above a rising 50-day moving average. Bullish divergence going into this as well. So, in fact, the longer we stay above that 200-day line, 2.8 pence, the happier and more confident we are that 3.8 pence could be on its way. Maybe along to a stock which I covered during the week because it looked as though there was a big turning point here for the stock, and it is Aminex. Here you can see that broken that line of resistance there from October. That happened around the 1.2 pence area, closed at 1.3 on the week. We're now looking for 1.7 pence as soon as the end of next month. You see the 50 and 200-day moving averages starting to cross, and they're both rising, so it will be a golden cross hopefully in the next week or so, and the run up to a golden cross tends to be the strongest part in the cycle, so that is all looks all decent at the moment. On to Beacon, and here we have a situation where the charting worked and then the fundamentals followed. We had an unfilled gap to the upside at the beginning of the month around the 0.085 pence level, and breaking above that 50-day moving average at 0.09 was a decent trigger for our initial target there at 0.14 at the 200-day moving average. We're now looking for as high as 0.18 over the next week or two, maybe by the end of next month, especially while we remain above resistance on the way down around the 0.12 pence levels, above 0.12, looking for 0.18 on Beacon. CapEx is next. I know it has its fans. Here you can see that we have flipped around after a sideways consolidation either side of a rising 50-day moving average. We've got bullish divergence line there as well. So looking for the shares to hit 2.11 pence over the next week or two, maybe by the end of next month, this month rather, and then by the end of next month up to as high as 3.3 pence at that March resistance line projection. Be cautious, you might want to wait for an end of day close above the top of that gap, around the 1.75 pence level. There'll be a gap close buy signal, which is always a nice affirmation to have. IQAI is next. I think it was requested by one of the leading Twitterati. Here we've got the shares bouncing after recent very strong news. Neckline resistance there around the 3.2 pence level, and above that we're looking for an initial target there as high as 4.75, maybe up as high as 6 pence by the end of next month. But the key here is holding that basically 3.25 pence support, former resistance, and making that new support. Moving along to another stock which has got AI in the title. Maybe this is a pattern for developing. Here we've got Insig AI, and that's broken a line of resistance there from May, broken through the 50 and 200-day moving averages, a little bull flag there, and above the 16 pence level, looking for as high as 27 pence by the end of next month, which is the top of a rising trend channel from back in November. One of the very good situations over the last few weeks has been Lunglife, and the rally here started with a bear trap gap reversal and a falling wedge break. That was around the 25 pence level. We had a gap close buy signal just at the start of the month, just earlier this month, and that was the mid-move consolidation around 60 pence, and now we're looking for as high as £1.30 by the end of next month, maybe by the end of this month. We already hit our target, our best case scenario target at the time, around the £1 level. Above that, looking for 1.30 by the end of next month. What a great recovery that has been in a horrible market. Speaking of stocks which have had a horrible situation, here we've got Maytech, and here signs that the stock is trying to regroup. We had an unfilled gap to the upside last week through a rising 50-day moving average, so it does look as though something's going on in a positive way. And initial target here around 21 pence. After that, maybe looking for the 200-day moving average at 24 pence. But just a decent sign there that the shares are finally turning around. Resistance there around 17 pence from last month, so we really need 17 pence to hold for the potential recovery to take root. If that doesn't happen, then we would have to abandon the recovery idea. On to Pathfinder, which I covered during the week, and thankfully for a change, it actually kept on moving. Bear trap gap reversal at the end of last month, another unfull gap to the upside this month and last week. Looking for initially up to zero point 0.8, best case scenario target maybe up to 0.95 over the next 2 to 4 weeks. So it looks like finally something positive there is happening, and we've got the 50 and 200-day lines both rising, so heading into a golden cross situation. I don't think there's much coverage anywhere of Primorus, but here it is. We've got both the 50 and 200-day lines rising. It looks like we're going to have a golden cross over the next couple of weeks. The other point to note is that we're in a rising trend channel from back in April last year. Top of the channel there as high as 4.8 pence, and we're looking for that while we hold above at least the 50-day moving average at 2.8 pence, and 4.8 maybe as soon as the end of next month. I wasn't expecting to cover the next stock in quite a while, but here we've got Pantheon Resources, which has obviously had a rather rocky ride over the recent past. Here you can see that we may have a rising trend channel base. We've got an uptrend line in the RSI window. We've broken a line of resistance there from back in June at 11.5 pence, and while we're above 11.5, and only while we're above 11.5, looking for 14.5 pence, maybe by the end of next month, and hopefully a bit sooner than that. On to the last three. First one is Thor Energy, which has also broken a line of resistance in this case from last September. A little bit wobbly around that, so we need to hold above 0.2. If we can hold above 0.2, then the turnaround here could take the shares up to 0.4 as soon as the end of next month. The other thing which gives us confidence, given that this is a bit of a rocky start to the turnaround, is an uptrend line in the RSI window, bullish divergence line with a lower low for July, but higher RSI. That does suggest the price action is improving. Finishing off with a stock which I meant to look at during the week, but missed out on. Here we've got Virgin Wines, closed above that May gap down that we had there. That was around the 39 pence level, and above that, on an end of day close basis, we're looking for as high as 53 pence by the end of next month. So let's see if stock with a very witty epic code will deliver the goods. That's it for me today. More updates during the week.